what's better to invest in, stocks or crypto? Obviously, in the past, it was very clear. Most people invested in bonds, golds, and stock was already seen as kind of the more crazy, wild thing, right? But times have changed, and these days, a lot of young people actually are pretty bored of stocks because they don't seem exciting, right? You have a couple of those meme stocks and some stocks like Nvidia in recent times, which has absolutely boomed, but most of the stocks are pretty boring, right? Especially dividend stocks. People look at it and say, that's just boring, especially when you compare to cryptocurrency or Bitcoin in particular. Actually, I can very quickly put an end to this discussion by showing you one graph where I basically compare the price of Bitcoin, in this case synonymous for cryptocurrency. I obviously use Bitcoin as it is the most dominant player in the crypto market and most established, versus the S&P 500. Now, when I compare it over the last 10 years, the total return of each, you will see a massive difference, right? S&P 500 has returned 233%, which actually used to sound pretty good. But when you contrast that with the returns Bitcoin would have given you in the same period, you can see over the last 10 years, basically, it would have been 14,400%. I mean, mind-boggling number. Now, when you look at that, you would basically say, well, it's very simple. Bitcoin is the much better investment. But sadly, I don't think it's that simple. Now, the time frame is obviously very limited, right? Bitcoin has been around since around 2009, but the S&P 500 and stocks in general have been around decades, right? So they have a much longer track record. And that's normal, right? After something grows, there will come a maturity rate. I don't think we're going to see Bitcoin for the rest of our lives growing by 1,000% every single decade, right? That would just be impossible to do. Eventually, it will also mature and flatten out. It will still continue to grow, that's my belief, but probably not at such a rate, right? So it may not be quite fair to compare directly as such. So in this video, I want to go into the pros and cons of each of the two investment classes, and in the end share with you what I will do with my investments going forward. And before I go into the pros and cons, one really interesting thing I want to share with you also is how companies and things change over time, right? For example, here we have right now the 500 largest American companies basically in the US, right? So we have Microsoft, the biggest company in the US, but also in the world, followed by Apple, Nvidia, and many of the other companies you see over here. So that's what it is right now. But the interesting thing is, when I look back to the 500 biggest companies in the US in the S&P 500, back in 2000, you will see quite different companies. Well, actually, Microsoft still continued to be the biggest one at the time, so well done to them. But then you have quite a few different companies that are really not there in the top anymore. General Electric, Cisco Systems, Walmart, Exxon, Intel, Citigroup, IBM, Home Depot, Coca-Cola, Procter & Gamble. I mean, really, really interesting. If I go back even further to 1990, for example, you will see once again quite different companies. Here, we don't have any Microsoft anymore. The biggest one used to be ExxonMobil, followed by IBM, and Coca-Cola actually turned out to be the 7th biggest company in the US at the time. So that's really interesting how the things are changing. But interestingly enough, it's not only with the stocks, but the same in the crypto markets, right? These are the biggest cryptocurrencies in the world by market capitalization. Of course, we know that Bitcoin is the biggest, followed by Ethereum, Tether, BNB, Solana, which recently has been really booming, and a couple of others over here. However, once again, if I go back and look at previous years, we can go, for example, to 2013 and let's say the 12th of May. And then you will see, of course, Bitcoin was still the biggest one at the time. But then we had coins like Litecoin, Namecoin. I never even heard about that. Peercoin, Novacoin, Dovacoin, Terracoin. All these coins, I never even heard about it. So it's really interesting to see how things are changing over time. And that's something I think very important to keep in mind. Because when you invest into stocks, you can either invest individually into individual companies, which may work out very well if you pick the right stock, like Warren Buffett, for example, did with Apple, which turned out to be his best investment. Even he was late, he had the highest returns from his Apple investments. Or if you would have invested recently into Nvidia before the hype, you would have made some nice money from it. But the chances that you pick the right one are fairly slim, right? The same with cryptocurrency. I mean, a lot of people trying to find the next Bitcoin. The question is there going to be another Bitcoin? Even though, quite frankly, when I looked at some of those coins, for example, recently a new coin that came up, Book of Meme. I mean, just the name already, oh my God, gives me goosebumps. But anyhow, it is what it is. And look at that, the market cap, right? Same as company have a market cap. They have now a market cap of 804 million. I mean, unbelievable. So people really flock to these things and pour their money at it. But when you invest into cryptocurrency, most people would naturally go with Bitcoin. Here you pick one specific company in that way or one coin, right? versus if you invest into stocks, you could potentially invest into ETF, which, as we've just seen before, is probably the smarter thing to do because over the years, a lot of the companies are coming and going. So investing into ETF is probably a smarter approach than trying to find the winner that will persist for the next 20, 30 years. The same with cryptocurrency. Unfortunately, while there are Bitcoin ETFs, there aren't really real crypto ETFs where you just invest money and then the money manager on your behalf buys the biggest coins. There are certain solutions and exchanges that allow you to do that, but at the same time, of course, it defeats, in my eyes, the purpose because holding cryptocurrency, you want to be independent of those exchanges or any centralized institutions out there. You want to take self-custody of your cryptocurrency, which is quite different to stocks, right? They're sitting with your broker. Well, they are under your name, but here you really and can take custody of your own keys, which really makes it so special and important in my eyes. Right, but let's look into the pros and cons of each of those asset classes. So the first one has to do with stability in history. As I've shown you before, obviously the stock market has been around for so much longer. It has a proven track record. We can see companies, how they develop over time. We can forecast their results. It's based on real results, right? They actually generate revenue, they generate profits, in most cases, we hope at least, and there is a real assets behind it. It's a real company that people actually need. So these things, I don't think go away. Some companies will go out of business and some others will do exceptionally well, but essentially the world is going to have companies in the future. There's no doubt about it. Are we necessarily going to have certain cryptocurrencies in the world? Is there a need for it? Maybe, maybe not, right? There's more questions around it. Here, we do have a proven track record, and I think that really gives confidence that we will see them around in the future. Another big plus for me in terms of stock investments is the fact that they pay dividends, right? Because like it or not, I like to have a passive income. Every month I get various forms of dividends paid to me from various stock holdings that I have, as well as my ETF. They pay me a quarterly dividend, and that's nice just to get it for holding a company. And I think it's a nice feeling, and it incentivizes people to invest for the long term, because otherwise you just invest money every month into stock and shares and what have you, but you don't really see a return, right? It's just a paper return. Until you sell something and materialize a profit, ideally, you won't really have anything from it, right? You're just plowing your money into a stockbroker. But getting those dividends paid to you, when you get a notification on your phone that you got money from a company, it just feels great. It obviously helps you at overall returns, but at the same time also, eventually, many years from now, you can live off those dividends if they're high enough, right? So I think that's a big appeal to many people who really chase those dividend payments. Another big plus about stock companies, in my eyes, is transparency, because they have to really report on a quarterly basis their revenues, their profits, their deliveries, and the management board is really being held accountable. And if they produce bad results a few quarters in a row, guess what? They're going to be kicked out of the job and a new team will be there, just like in a football club if the team keeps on losing. So I think it makes it very transparent and very accountable, because you as a shareholder want to make sure that the leaders of the organization really have the best interest in mind and performing in the interest of the shareholders. I like that I can go into those results, understand them, see them for myself, and based on that, make my own decision. Once again, a lot of the cryptocurrencies, you don't know what it's all about. A lot of it is very opaque. You're kind of hoping for things to go up, and we'll speak about this later on. But I think this transparency is a big point why people like to invest in it. They like to follow the companies, myself included, and that just gives you more confidence that the hard-earned money that you put into it is actually put to good use. Now let's look at some of the cons with stock market investing. And of course, like any investment, there is certain market fluctuations. Now, while we've seen the S&P 500, for example, over the last 10 years, last 20, 30, 40 years, has been going up on average, the last 30 years compounded around 8 to 9%. Overall positive returns, but there have been years where it dropped by 20 up to 30%, I believe, certain years. So there is certain volatility, right? Of course, not as much as in the crypto markets, but at the same time, there is volatility, and a lot of people, they can't stomach that. When I've shown you in the beginning the graph of some of the companies that used to be the biggest companies in the US, now they're nowhere near the top. That means they didn't perform as well or even dropped in their overall returns or their prices for the company due to various reasons that impacted that. So that's something to keep in mind. It's not a stable investment that set it and forget it, that just grows in one direction, that is up. These investments usually don't happen, and if they are only going up, like bonds, for example, then they don't really have a high growth. Obviously, stock market has a higher growth than bonds would have, or just keeping your money sitting in the bank account and getting a little bit of interest. So while on the one hand side, it could be seen as a con, of course, it's also a pro, because any fluctuation can go both ways. Yes, while it can drop, it also can go up, right? And we see the same in cryptocurrency. It's very volatile. It can drop quite a bit, but it can also shoot up quite a bit, which we've seen with the major growth it had over the last few years. Now, the second con that people sometimes bring up when talking about stocks has to do with the slower growth. They basically refer often back to this chart and say, well, look at this. Absolutely, Bitcoin and other cryptocurrency demolished, absolutely squashed it. So why would I put my money into that if I can only get a 233% return over 10 years? Seems like nothing, right? And while purely looking at the numbers, that is technically true. But here we talk about long-term investing. So while over a 10-year period, that is true, who knows what's going to happen over the next 10, 20, 30 years from here on. We've seen the track record of the S&P 500 that has consistently returned great returns. So that is one thing to consider. You have stability and predictability of your future returns. With crypto, you may have another huge upside in the future, but who knows? Maybe it will all collapse eventually and go down to zero. So then all your growth in the past means nothing. So, I think while the slower growth might be seen as a con, at the same time, it is a bit of a hedge for taking on too much risk. So that's something to keep in mind, and for you as an investor to make up your own mind and decision. And it always boils down to the question of risk versus reward. So that's a decision you have to make for yourself. Now, with regards to the pros of investing into crypto, and once again, when I speak about the crypto, I mostly refer to Bitcoin. And here, of course, we see the high potential returns. I'm saying specifically potential, because past returns are definitely not a guarantee for future returns. So while it's nice to see the return, also keep in mind if something already boomed so much, how further can it go? Eventually, as I said, it will probably mature. It will still continue to grow, but maybe at a lower rate than it has in the past. So yeah, I think it still has huge growth opportunity in the future, and it's appealing for those seeking high risk. That's why I believe it appeals to a lot of younger people who anyways don't have much to invest in the beginning of their careers, right? Which is normal. So if you only have very little to invest, I also believe that maybe buying Coca-Cola shares that return you 5-6% a year, maybe that's a little bit boring if you invest 100 euros, right? But if you put those 100 euros or dollars into the crypto market, they could 10, 20x if you pick the right coin. Now, they could also go to zero, but then the loss may not be that bad because, it's just 100 euros versus if they 20x, you have 2K. So it's a question, once again, risk versus reward. But that obviously appeals to a lot of younger people or people who already have a big portfolio in other things invested in real estate and stocks, what have you. And then they just want to have a bit of a thrill-seeking, high-risk, high-reward portfolio. And for those, it can be definitely very appealing. Now, another big pro of investing into cryptocurrency is that you're part of innovation and diversification. Now, first of innovation, obviously, it's still one of the newest investment classes out there that you can invest your money in. And I think that's exciting, right? I'm very much technologically forward driven. I think it's a good thing to be part of that evolution of investment asset classes. And I think they're here to stay. Again, which one will survive and be the best? Who knows? But I don't think overall cryptocurrencies are going to disappear. We see a lot of countries now even investing into their own native currency, digital token in a way. So I think we'll see more of this in the future. So it is going to be the future. And by investing into it, you're potentially future-proofing yourself. Which is going to be the winning horse to bet on? Who knows? Only time will tell. But I think that crypto is here to stay is a given. If you're early on to participate, you can definitely benefit from it. And second point, of course, diversification is another big point because I'm a big fan of diversifying. That's why I invest into real estate, into individual stocks, ETFs, dividend stocks, as well as cryptocurrency and other things, just to diversify, because you never know, how things will turn out. Plus, market cycles sometimes favor one asset class over the other, right? So I think it's good to diversify across different asset classes. And another big pro for cryptocurrency is the accessibility. I mean, the beauty of it, the markets are operating 24/7, 365 days a year. They never close. Unlike stock markets, they operate Monday to Friday, certain hours, even public holidays, they're closed. So sometimes, when you want to make a trade or you need money urgently to sell your shares and use that money to, pay for something, you might be in bad luck if the markets are closed. With crypto, they're always operating, which is great. Of course, on the other hand, they're always on, right? So you also need to check, in case a markets collapse overnight and you want to sell or get out, you better stay on top of the things, unless, of course, you're a long-term investor where you don't really mind these market fluctuations. I like to buy my crypto whenever I want at certain time of the day, not to think, oh my God, it's a public holiday in the US and I cannot buy. So I think that's a great beauty and makes it more active. And especially when the stock markets are closed, most people then go over to crypto and there's more activity happening. So that's really exciting. I think once again, it appeals to a lot of younger generation and has a global appeal, not just looking at the US opening hours, because then people in Asia have a hard time being part of the market. So this way you really involve the entire global population, which adds more people to the mix. Now, with regards to some of the cons, of course, the biggest one would be the volatility, because yes, crypto, while it's still new, it can swing massively both ways, right? While we've seen major growth over the last few years, there have been also times of major decline in the price of Bitcoin and other cryptocurrencies. I mean, just look at it. When we were here at one of the peaks back in 2021, and then it basically fell from almost 60,000. We were here just around 63,000, down all the way to 17,000. I mean, that's a huge, more than 50% drop in your share price. So if you bought it over here and then you see your portfolio crumbling down, a lot of people were panicking, freaking out, selling even at a loss just to get out of it because they thought it might go all the way down to zero. So the volatility goes both ways. Of course, long term, it's nice to see the growth, but there are definitely times of drops and you have to be able to stomach that. Now, another con to consider is the regulatory uncertainty. Of course, with every passing year, there's more regulation around the topic, which I think is a good thing. But overall, there's still a bit of uncertainty. Different jurisdictions have different rules about it. Taxation is still a little bit behind. There's new rules coming out. And even when we look to the US, the SEC have been suing different crypto exchanges, trying to block the establishment of a Bitcoin ETF, which finally was approved recently. Now they're trying to fight the battle around the Ethereum ETF potentially coming out or not. So yeah, there's still so many uncertainties, definitely much less regulated than, for example, the stock market, which some people see as a good thing, but I think is actually a bad thing because we don't know where the regulation goes, right? Imagine tomorrow all the countries around the world come together and sort of ban all the crypto exchanges. We're going to have a hard time to buy and sell our cryptocurrency. Now, I don't think it's going to happen, but obviously we've seen some countries banning crypto exchanges altogether. So all of a sudden, people in those countries had a hard time to, transact with cryptocurrency. But on the other hand, of course, a lot of countries like the UAE and others are very friendly towards cryptocurrency and really embracing it and trying to attract the big players and position themselves as a leading country in the crypto space, which I think is also a good thing. So in the end, we will see what is the right or wrong approach, but that uncertainty can definitely still keep some of the big players and financial institutions stay away, at least for the meantime, from investing huge amounts into cryptocurrency. And the last part has to do with the security risk. Now that's a topic for a whole separate video, but basically the whole point of cryptocurrency, which I think is the beauty of it, is the fact that you can take custody or ownership of your own cryptocurrency. It will always stay online. It doesn't mean that you kind of download your crypto, but you take care of your keys, the keys that unlock your cryptocurrency on the public blockchain. So that's really powerful. But sadly, a lot of people fall for the convenience trap and leave their cryptocurrency on the exchange because it's the easy thing to do, right? You just log in with your Face ID or what have you, and then you have all the crypto there and do whatever you have to do. But actually what you should be doing is to get a hardware wallet and take ownership of your own cryptocurrency. But that comes with its own set of challenges because if you have a hardware wallet, you need to be able to transfer cryptocurrency to that address and then take care of your precious seed phrase that basically unlocks your cryptocurrency. So you have to keep it very safe that nobody has access to, and then make sure your house doesn't burn down because once they're gone and somebody else has them, your crypto is gone. I can tell you that. So it's a whole set of different challenges. So it's not very easy, right? Keeping your money in a bank account and then paying for something with your phone is much easier than cryptocurrency is right now. But then again, let's not forget that we're still early days. I think these things will improve over time and there will be more and more security features in place, plus convenience features. But always remember, not your keys, not your cryptos. So if you don't hold on to your own keys, that basically means that you have blind trust into some institution online that pretends to be your friend, but you never know what will happen to them. And we've seen a lot of the big exchanges like FTX and Celsius go bust, and with it, your crypto will be gone. So make sure you take ownership of your own crypto. So after looking at this, what is my take in this discussion? Now, in my opinion, I'm a diversified, conservative, long-term investor. That means I invest into different things. I don't put all my eggs into one basket. While I'm very tech-driven and still young, I could technically go all in into cryptocurrency or even Bitcoin, put all my money in there and lean back and hope that in 5-10 years from now, I'll be multi crypto millionaire. Now, it might happen and work out well, but on the other hand, there's still the risk factors, some of those that I just listed, that potentially might backfire and it could eventually go to zero, right? There are a lot of other risks that I even haven't touched on, such as quantum computing, now with BlackRock and other big ETF players entering the Bitcoin space, for example. How could they potentially short the market to make money? So there's so many more questions and potential risk factors to consider as well. That's why I don't feel comfortable putting all my money into Bitcoin. I really like it. I will continue to dollar cost average every single week into Bitcoin to build a bigger position. And that's my only cryptocurrency that I want to be holding going forward. But at the same time, I will definitely be continuing to invest into stocks. For now, I mostly invest into dividend growth stocks. But having looked at some of those charts, I really wonder, will I be able to pick the winning stocks in the future? Because we've seen a lot of those companies that did very well a few years ago are right now not really relevant anymore. So I think long term, I might see myself moving more of my money from individual shares into the S&P 500 ETF, because that way, whoever is the dominating company, I will benefit from it. I don't have to pick the winning horse, so to say. I just bet on the US economy, which I don't think is going to disappear anytime soon. So that might be the way, and then continue to dollar cost average into that as well. So ideally, in the future, I would be investing every single week some of my money into an S&P 500 ETF. Right now, I'm using Vanguard's VUSA ETF for that, and at the same time, some amount of money into Bitcoin. For now, I would imagine this amount to be 50-50. Long term, I could see a slightly higher position towards Bitcoin because I am quite long-term bullish in it, but I will definitely not stop investing into the S&P 500 because I really think it's a nice hedge, because for all the reasons that I mentioned before, it has a long track record. I know my money is going to be safe, and I really don't see a world without successful companies in it. But of course, I also understand that we have more and more younger people coming and looking to invest into their money, and for them, stock markets might be less appealing. So long term, I could see more outflow of money into stocks and instead into cryptocurrency, which of course would impact the overall return. So again, while I don't think companies will disappear, there will always be a stock market or a market of stocks actually. But at the same time, investing into cryptocurrency, I will future-proof myself and hopefully benefit from higher growth in the future. But I'm interested to hear from you. What do you think about it? And what is your preferred asset class? Are you going with stocks, crypto, or both? Let me know down in the comments below. I'm very happy to hear from you. Next up, check out this video over here. As always, guys, thank you so much for watching. Really appreciate it. Stay healthy, get wealthy, and I see you in the next one. Ciao.